Good afternoon. This is Markets Today. Welcome. It's a lot of discussion lined up, but some of the top news we're following today is Kenya government is selling a syndicated facility and has invited bids to international banks to submit bids for about $1.4 billion, which is just about 150 billion Kenyan shillings. We'll also be tracking that, but obviously this is such a big news and brings in the discussion about debt sustainability back again. Remember, as of June, total public debt had risen to about 5.8 trillion Kenya shillings, and these new additions further exacerbates the situation, and the discussion is how sustainable is our debt. We have that lined up and following up. We'll also be following up the market, just about 160 million worth of Kenyan shillings worth of shares traded so far. Safaricom being the top trader, trading about 3.9 million shares at about 27.35 shillings, followed by EABL trading about just under 100,000 shares at 202 Kenyan shillings. But back to the discussion on debt, Mbithe, you've just seen that Kenya has invited bids for a syndicated facility of about 150 billion Kenyan shillings. What's your initial take?
1.45 billion shillings. And the indicative pricing is what, 6.45 percentage points above LIBOR? That's pretty
So they're likely
steep.
to pay a premium.
Certainly.
Yeah.
And what are we using this for? Are we paying salaries?
Yeah, it's going to be used to pay doctors' salary, maybe effect some pay increase.
And your favorite conversation, division of revenue bill.
Yeah, but this is very scary because we're using debt to pay the current expenditure. This is not very sustainable.
It's not sustainable. And then also recall, the banking results are now starting to trickle in. Equity Bank came out last week, down 16% quarter on quarter. CFC Stanbic is announcing tomorrow. Certainly curious to see what happens. KCB next week, Coop Bank the week after. So if you're seeing weak numbers coming from the banks, and then on the flip side, the government is actually borrowing for its recurrent expenditure. I'm not too sure what that tells us about the underlying economy.
The general picture is that the strength, it's very weak actually. There's not even a strength, but it's certainly a very scary development. Yeah, Kenya going there. And typically syndicated facilities are very expensive.
They are very expensive.
Short term. You rarely get beyond 2 years, and you're talking about 6.45% above LIBOR. We're looking at about 7.5% effective rate. Well, they're yet to provide further details, but obviously we expect the international banks to bid, obviously
at that level. So it's something worth to see and to tie into the numbers. But then also on currency, slight weakness overnight. It's now at 103.3, 103.5, very, very slight weakness overnight. So just also keeping tabs to see what's happening there.
Yeah, yesterday we were talking about it's going to 102. It looks like this latest development is not good.
It doesn't look very good, but then also what I'm actually concerned more about is the slight weakness that we've seen on Safaricom today. So it's down to 27.3. It was a 27.45
So it's 27.35?
Yes.
So remember when about 3 weeks ago it was 28 shillings?
So, I guess that for me is more of a proxy with regards to investor sentiment. It's largely been net outflows out of the name, but anything that's happening on the economy and the second half numbers that are coming from banks will more or less reflect on Safaricom and what investors choose to do there. So certainly worth keeping tabs on bank financials.
But a broader conversation is that the NSE benchmark, NSE 20 share index is a 10-year low.
Still down. 10-year low.
10-year low.
10-year low.
It's below 26.
My goodness.
Keeps going down.
Can we actually
2,400.
Is there any reason to still be on equities? Is there any reason to be on equities? I really want to find out what we're going to be discussing on asset allocation.
We are actually talking asset allocation.
Maybe it should be 100% fixed income.
We're talking
just get a guaranteed return.
Let's see how this plays. We're actually having Ken Kani, who's the CEO of Britam Asset Management, to take us through asset allocation, how to deliver alpha in a bearish environment,
exactly,
and what investors should look at. And buy side will actually give us more direction on where money is heading into. And we discussed it yesterday.
Certainly.
It appears the fixed income market is a net recipient of these
it is.
outflows.
Yes, it is. Even foreign outflows, the fixed income market is suddenly receiving more foreign inflows, largely from, North American clients, from European clients. It makes sense, as opposed to dealing with the volatility on the NSE that we continue to see.
Yeah. Globally, stocks paired some gains yesterday. Well, China
nothing much has
feared
happened.
out of
Trade wars, currency
China
wars.
didn't. Yeah, they didn't respond further.
But then there was a surprise move that happened last night. So Netherlands cut their benchmark rate by about 50 bips. Everybody thought it would be 25 bips, and that caused a nosedive on their currency. So nobody expected that. So I think everybody's just trying to get a sense of what is going to happen between US and China. What can they do? So everybody's just there watching their screens to see the next move. That was certainly unexpected.
Who's going to blink first?
Who's going to blink first? So we just have to wait and see. And for us, of course, this is Africa. So we just wait for the rest of the world to keep moving, and then we catch on much later.
Let's go for a short break. When you come back, we discuss asset allocation with Ken. Can you don't go away? Let's close it up with commodity prices. See you shortly.